Hello traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we're just going to be breaking down an effective commodity scalping strategy. All right, this strategy is built for speed and simplicity. Whether you are trading gold, oil, or silver, this strategy helps you enter and exit with precision. It's perfect for short-term traders looking for quick setups. Okay, let's just get right into the core structure. Now, the best time frames for this strategy are the 1 minute and the 5-minute charts. But before you drop into those, always do a quick top-down analysis from the 15-minute or the 1-hour chart. This gives you the overall trend, so you are not scalping against momentum. Trading in the direction of the higher time frame trend increases the quality of your entries and reduces whipsaws. All right? The core setup involves spotting momentum surges followed by small retracements. So imagine gold makes a strong bullish push, like what we can see happening right now. Okay, so gold makes a strong bullish push. Instead of jumping in, you wait for a minor pullback, like what happened here, a pullback, right? You know, a couple of candles moving against the trend. That's what we call the pullback. Now, this is your zone. This is where most traders hesitate, but you are looking for a price action trigger, like a bullish engulfing candle, or maybe a break and retest of a small zone, or even a clean rejection week, right? So you can see we actually had, you can see a bullish candle here. You can see this rejection week that we had here. Okay, a brief consolidation around here, very brief, and then a breakout to the upside. You can see a break and a retest. You can see that break and retest actually took place here, and then a continuation. So basically, you are looking for a sign that the pullback has ended, and then a trigger to enter a buy in the direction of the trend. So these signals give you the confidence to enter with tight stop losses and short targets. So once you spot the retracement, your entry should come on confirmation. Don't chase the move. Let the market pull back, form your pattern, and enter on the break or close of that setup candle. Okay, your stop loss should be tight, just beyond the retracement's low or high, depending on the direction. If it's a bullish direction, it's going to be below the retracement's low. If it's a bearish trend, bearish direction, is going to be above the retracement high. All right. You can also use a fixed risk to reward ratio, like maybe 1:1.5 or 1:2. All right, but I recommend a minimum of 1:2 though. If you're having a tight stop loss like this, 1:2 should be very achievable. All right, so maybe you're risking about, something like this. You can just target 1:2. So long as the trend is strong, well, you can actually even go 1:3, 1:4, 1:5, depending on the strength, the momentum in the market. And so long as you are getting confirmation, of that trend, so long as the trend is strong enough and you're getting confirmation, you can have higher profit targets. You can just be trailing your stop losses as the price moves in your direction. You can use this strategy during high volatility sessions, sessions like the London Open, the New York Open, or during major commodity related news releases. So that's when you get clean momentum and reliable price action. Avoid using it during Asian session lows or when volume is drying up. Okay? Low volatility kills scalping efficiency. All right? So you want to focus on periods when volatility is high, periods when it is going to be easier to get opportunities. All right, periods when opportunities are going to be showing up frequently, opportunities to trade. Okay, now the commodity scalping strategy works because it is based on what price is doing right now, not lagging indicators or complex systems. You are trading momentum in real time using clean patterns and disciplined risk management. No noise, just movement and precision. This strategy does not require technical indicators. Basically, this is a price action oriented strategy, a price action focused strategy, a strategy that focuses on market structure, that looks out for trend following. All right, inculcates the culture of minimizing drawdowns by waiting for pullbacks before entering a trade in the direction of the trend. All right, so this is a strategy that you want to try out if you are looking for something that can yield good results. All right, not that profit is guaranteed. There is no strategy that guarantees 100% profit, but this is a strategy worth trying out. You can actually decide to test it out on a demo account first, and you can practice for a while and see how it plays out for you. And after that, if you have been consistent practicing on demo accounts and making good returns, you can then proceed into a live account. All right, but ensure that you do not risk more than you can afford to lose. Do not trade with an amount you cannot afford to lose, and do not risk more than 1 to 2% of your account balance in a single trade. Also, pay attention to your risk to reward ratios. Okay, do not forget about that. It's a very, very important concept when you are trading for the purpose of risk management. Okay, so if you found this video insightful, if you found value in this strategy, hit that like button and subscribe to the channel for more trading insights. Okay, we've got more breakdowns coming your way. And comment below which commodity you want me to apply this scalping setup to. Okay, we already applied it to the gold commodity. You can see this is gold. We just tried out this strategy. I explained this strategy on gold, but if you want to see it on oil or something else, just let me know in the comment section. Okay, thank you for watching, and I look forward to seeing you in the next video. All right, trade smart and stay sharp.